Let's talk quickly. I actually didn't even kind of go over what we were going to talk about today. I wanted to see how the market would react because today was, I think, an important day to get an idea of what to look for here, right? All right, so good afternoon, everybody, by the way. Hello, welcome, everybody. Happy New Year. Interesting time in this market. Now the calendar flipped, and a lot of people are expecting a different market. We have all the reasons to see a different market, more volatility, the Fed supposedly unrigging the game, right? So it should lead to a lot different of market environment than what we've been seeing the last couple of years. But as I told many of you guys, this little stretch, okay, that we've gone through here from, I would say, probably late summer, maybe even midsummer for me, all the way up to now was, I mean, we could be in a full-fledged bear market. I kid you not. And I wouldn't be treating what I'm doing any differently, if that makes any sense. In other words, if we were in a legitimately a full-fledged bear market, okay, a known bear market with the indices and everything else, I would be looking for the same opportunities I'm looking for exactly right now, okay? And just quickly, let me elaborate on that, and it'll probably make sense to a lot of you guys. Stock picking, stock selecting in this current environment, right? Especially of late leading up to here, has been a debacle, right? So I haven't been doing any of that on swing trade side, position side, right? I've been focusing more on the major indices to play even, honestly, guys, even intraday now. I look towards the indices and ETFs and stuff like that first before I look at names. And, that's got a lot to do with I'm trading the equity, unlike a lot of you guys who are trading the options out there. So I'm not playing Tesla, stuff like that. I know a lot of you guys play those names actively. So, if, again, the climate of the market is not accommodating for individual stock picking, the flow is not supportive of individual stock picking, I'm just going to lean towards the indices. And what I'm looking to do is I'm looking to take advantage of the short-term sentiment signals and, try to ride momentum, right? And try to make some money. So I'm grinding it out and waiting for something to loosen up, right? And we talk about each and every week what that ultimately means as far as loosening up. It's either going to be some sort of reset, right? Doesn't have to be much, but some sort of reset where the trend that comes out of that reset we'll see new leaders, new flow, new names, better price action, better breadth, more participation, that sort of thing. Or, it's not a law that it has to be a reset. We could just go through a period of time where we have to deal with this, and then, the flow just starts to broaden out, the price action starts to broaden out, and, things start to look a lot healthier. I was trying to think back, like, over the years, for when climates like this have flipped and changed to the better. And like everyone that I can recollect, there was always some sort of little reset beforehand. There was always some sort of reset beforehand. Late 2018, there was one. What was the melt up? That was 2017. There were quite a few. I don't know if you guys remember, any of you who were trading post 2008, from 2008 on. After the initial rally, the first couple of years, I think from like 2011 on, you had a lot of shorter periods like we're seeing right now, where it just paid to stick with a handful of names and the indices, So it's part of the game. It feels longer each and every time we go through something like this. And it's frustrating to, to sit through it and wait through it, right? But it's not that unusual. It's not that unusual, especially when the Fed, has their hand in the cookie jar, especially when the Fed is, on the remote control. So the moral of the story here is, again, this could be an all-out bear market, and it can't get any worse for me, if that makes any sense. This is the way I'm playing right now, is as conservative as I'm likely to play. There'll be periods where I sit on my hands and do nothing, zero in all cash, but you're talking about really short periods of time where there's liquidation, that sort of thing going on in the market. And that doesn't last long, but this is as conservative as I'm going to be through a lengthy stretch, no matter what the market climate is. And, think about it. In bear markets are even better. Why? Because bear market rallies, you get a lot more entries off sentiment in bear markets, believe it or not. All right. So every rally rolls over hard and does damage and scares the living shit out of people. So if you're looking for that sort of thing, you don't have to wait around too long for it, like now, right? Like, think about for the past 6 months to find an entry or sentiment, like pulling teeth, right? You can't get there at times. There's just not enough selling. In bear markets, you get it like that, right? The rallies are quicker and shorter, but like I said, I've been treating these rallies the same way the last few times. So it's no different, and honestly might be even better for me if we were in a bear market. Okay. But again, these are all labels. Like, we are in, supposedly we haven't even been in a correction. And as we've discussed, there's been under the hood, a stealth bear market like nobody's ever seen, right? I mean, it's been deadly in individual names, speculative names, growth names, right? So even though, quote unquote, the indices aren't in that bear market or correction, there's been a disaster underneath the hood. Okay. So it really doesn't mean anything. That's why you have to pay more attention than just the indexes and coming in with just, am I buying or selling attitude every day. There's more to it in this game. And if you want to take a lazy approach, you get caught up in climates like this where you think, oh, the indices are up, I can make money in anything. And, it's going to cost you money. You're going to learn the hard way. Right. So what we have now, and this is my take, like we talked about this Sunday night on the webinar, we kind of have a tug of war going on right now. Right. And the tug of war is between, on the bullish side, January, the start of a new year, major possible flows coming into the market because players were underinvested last year. So you got that buy the dip mentality still out there, right, for the month of January. And on the other side, underinvested sentiment, okay, is, even with the markets near high, sentiment is nowhere near that, right? You got a lot of scared money out there. Even the bulls, they're scared bulls. So that's going to help support markets, keep them afloat. So that's on the one side, that's the bullish side. And the bearish side, which we were talking about, we kind of didn't have anything at the start of January. And we could have possibly seen another kind of push up higher to an overextended point and then roll over from there post January expiration, as we were talking about. But then you had the Fed, again, a lot of people don't think of that as a major deal, but people were hoping that the Fed would push back on that balance sheet issue. And the Fed has been sticking to their guns, and sticking to their guns, meaning they still are running their mouths about being hawkish. Okay. And that's tugging on the other side of the rope. All right. So you got those two things tugging on each side, right? And when you have those two things tugging on each side, you get range bound, choppy type price action, right? So you get stuff like this. And I think the good thing about this is I think we are closer to the end than we would actually think here. I think once we get out of January, something's going to give. One, you lose the early year flows. That's gone. So people front running that and trying to get into equities off of that will be gone. And then you got, the Fed meeting. You got a lot of balls in the air once we get to the end of this month, including, January options expiration, as always, to where we probably see something interesting come out of this. Either way, I'm still, I don't know if it's the word convinced I should use. I'm still hopeful. I'm still hopeful that what comes out of this is just something boop, like that. You know what I mean? I'm hopeful. At the least, I'm hopeful of that, because I don't know about you guys. Again, there are opportunities. I don't want to sound like a wet blanket, because I see, there's some of you who are doing what you need to do and finding ways to make money. There are opportunities out there. We're not at a place where we should be in all cash. You know what I mean? You see energy names have been insane the last couple of weeks. Financials have been insane the last couple of weeks. So there are spots, if that's kind of your niche and up your alley, where you can make some money. But this rotation, growth, value, what are rates doing nonsense is on a lot of our nerves, a lot of our nerves. And I'm a stock picker by heart, that's my bread and butter when it comes to this game. And I want to go back to just, picking stocks and building positions and not worrying about, stopping myself out immediately or selling for a profit before it vanishes, because there's just too much risk out there, right? So I feel a lot better about it too if we get that kind of rinse to where the point where we have some added sentiment support. Again, that if you have a checklist of risk that you're looking at, right? You go like you're evaluating your trade right now or your strategy, and there's a checklist of, what are your risks right now? As if we do get a flush, if we do get a rinse, little by little, you're going to see those risk boxes, come off the table. You don't have to worry about it, right? Are hedge funds long? No, they're not. They're short. Boom. That becomes bullish. How sentiment look? Oh, sentiment bullish. Little by little, you're going to have all these things that now will add some support to the market, as opposed to what we're worried about, you buying here and worrying about this, getting caught in this, The squeezometer closed, what was it, 53? 53, I think it was. 53 today, yeah. 53. I think the low was 40, 41. I'm not even sure. But so, yeah, a little over neutral. So it's got a little bit of room for more upside. But that's what you're going to see. You're going to see when we get these sort of things, sentiment line up kind of like that, right? So we'll see from here. We got the CPI tomorrow, right? We're either going to have a little more to this squeeze, which is certainly possible. And if that happens, you got to be careful again. That quick, guys, right? I mean, it feels like it's every 2 days, but if we squeeze off the CPI tomorrow, we get another day like, let's say today, and depending on how sentiment looks, you're gonna have that risk on the table again. You're gonna have that risk on the table again. And look, right? See this here? this rip, looking at a chart doesn't even do it justice, right? That rip was a violent rip. All right. But when we got to like this point here, how much, what are you going to do? You understand? Like, that's the point I try to make to you guys. While we're in this environment right now, people look at like, oh, you have some decent room, wiggle room. When you get to this point here, are you that nimble? Especially if you're looking to trade names, you have that much confidence in your trading skills that you can wiggle through this, make some money before something like this bites you in the ass? It's annoying. It's annoying to worry about. You don't want to worry about that. And again, this is not something that's unusual, because when you have a market that's every dip gets bought, right? This is what you get. In other words, to get a better setup out of this, they gotta burn those dip buyers. Okay, they gotta scar those dip buyers. Once they do, what we'll see is the market will rally, and the bulls won't be so eager to jump on board. That's what you'll start to see with sentiment when they get burnt, dip buyers. You know what I mean? They got burnt, and they think all of a sudden their tune changes, and they think, it's just a bear market rally, or you hear that whole lingo. And then that's where you see, just the start of a new trend where dips get bought. Like if you look back in the past, like you look back through any of these yanks, right? So you see like this, right? They all look a little bit different, right? You had this melt up, right? Then this happened, okay? And all the money that plowed into here, all that sentiment that was extremely bullish, all of a sudden they weren't too confident buying this dip here, right? This is different. Yeah. Now they're scared, right? Because they got burnt, right? They lost money. That crystal ball system didn't work, right? They lost some faith in it. So, and then here you have a rally, right? I remember this because this was like just perfectly set up. Here you have a powerful rally in where they finally started to get back in again, right? Because you're thinking new highs, and then this happened. And that destroyed them, okay? Because they didn't believe in this whole entire move until the end. You know what I mean? Because this happened to them. And you think about the psychology behind it, it makes a total sense, right? Like 2008, that debacle, what kind of wounds that left in players of this game who attempted to play this game post 2008. Every single dip throughout the rally, the 2009 bottom, all the way to, you name it, 2013, every dip from that point, people treated like Armageddon because of that fear coming out of that 2008 debacle. Everybody was so, oh my God, everybody was so scared off of what happened in 2008 that any dip along the way, I'm talking about years later, people thought, here we go again. It damages psychology. COVID was exactly that. You know what I mean? COVID, because it happened so fast, and you had something new, right? It was a pandemic. Nobody knew. We thought we were all going to turn into zombies. We had no idea what was going on, right? And you remember, just the logic behind people applying logic to the rally post-COVID. Nobody could see how the market could sustain an uptrend coming off the COVID lows. There was no logical explanation. And interestingly, the Fed didn't apply, because what people thought, the Fed can't fix a pandemic. This got nothing to do with the Fed. Like, right? They kind of ignored what the Fed does because they felt like it was something new, and what the Fed didn't apply here, didn't work. but they were so scarred from what they seen in, again, just a short amount of time. Oh, that's not it. This is a short amount of time that, you remember the term we used, the non-believers, right? Just non-believers, the whole rally until, March. That's when things, right? People started to turn somewhat bullish again. So we don't need something like that, something that extravagant here, but we need a reset, I know I sound like a broken record, but we need a reset. And when I say need is if we want the current climate and environment to change from what we're seeing right now, right? So you want stock picking to get easier than it is right now, right? More fluid, right? Breadth, participation, just the overall health of the market. You want to see improvement there? More than likely, we need to see some sort of reset. We need to see some sort of reset, right? This growth value shitstorm that goes on constantly. I don't even want to hear, oh, it's interest rates, whatever. Interest rates, were going up, and then the growth names will go. I don't even want to hear it anymore. I don't even want to hear the excuses or the reasons anymore. This rotation's been going on for a long, long time. A long, long time. This market has been held up through rotation, even before the interest rates. Yeah, exactly. The theories change daily. They're excuses. You could apply it to anything. Yeah, Jay Powell's dovish one day, he's hawkish the other day. We need a reset. You need players to get smoked out of their holes. Right now, what the problem is players can find somewhere to hide no matter what. You need the market to smoke everybody out of their holes where they say there's nowhere to hide. There's nowhere to hide. They get hit everywhere they go, right? They get stung everywhere they go. And, and like, for example, you got growth names. A lot of these names have been mangled to death, mangled to death. No, we don't. We don't have stretch positioning. You don't really have the backdrop for a VIX explosion type thing either, Ani. Like that. I think that's part of the problem here. It's going to need to be quick, and there's got to be some noise behind it. And maybe it buys us a little more time, Ani. I'm not talking about the start of a whole new bull market, like we've had off the COVID lows, but maybe it buys us 2-3 months of a healthy uptrend. We'll take that, no? Right? And then let a correction come again in 2-3 months, a reset again. That's more normal. Maybe with the Fed, unraveling a little bit, maybe there'll be a little more normalcy behind the market and we'll get corrections, for Christ's sake. Used to be a normal thing. That's the problem, where we're not getting those resets. We used to get them all the time. Some were worse than others, right? When the market was longer in the tooth. Now it's like, there's no such thing. And, people all automatically think, because they see the indices up every day, that because we don't get corrections, it's uber bullish out there and there's exuberance out there. I know more traders that are crying the blues right now than are bullish over their eyeballs. You know what I mean? I know more traders that are frustrated with this market than bulled up right now. Right? Because it's been anything but a bull market. Right? So right now, people think they can hide in the big names and they can hide in the indices. It's that simple. That's what's got to get hit. That's what's got to get hit. Yeah, but Jared, what's funny? It's like, if anybody on Twitter boasting about, picking winner after winner after winner, in what? If they're playing individual names, damn well they can't be picking winner after winner after winner. It's in swing trading. It's impossible right now. It's impossible right now. You know what I mean? It's impossible right now. It's been, the handful of stocks, and little by little, some of that list of names are, one by one they get peeled off, and at the end they should usually they get hit. Baidu, JD, Baba, PDD. Yeah, I mean, but you see, like, these things have been destroyed, but what? What do you want? Like, I can't get excited about this. You know what I mean? Like, this is what you want to buy right now. I guess if you're contrarian at heart, like, look at this, right? Yeah, it looked good off this dip. 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 Right? Hey, you got some work to do. Again, there are trades there. You know what I mean, guys? There are trades to be had and everything. Some are more dangerous than others, but to swing trade something like this, like we went over this. I'm not going into a China rant. It's been too much. I've been on a China rant for the past year. You know what I mean? It's just a tough trade. It's just a tough trade right now. Like a lot of other things. Okay. I'm going to be a gentleman. It's just a tough trade. It's tough. Like a lot of other things, it's tough. But again, I don't think, see, what I think a lot of us have been doing, and I've been a culprit of this too. We're kind of looking to try to find, maybe we're missing something. Oh, maybe there's a pocket of this market. Maybe there's an opportunity where we can make money. Maybe there's something like this swing trade, where in reality, there's not. And it's the climate, it's the environment. All right. And the thing to do is to be patient here and wait it out. You know what I mean? Wait it out. Day trade with stops till you turn purple in the face. You understand? If it's annoying and you don't like the small losses that you're taking, you don't think it's worth it, then stop and just be patient. But this is not the time to just keep forcing and looking for something that's not out there. That I'm telling you, that's what goes on in these phases. People continuously look around. So they look around and they say, oh, well, this is going up. So maybe this is a place I can make money, and then that rolls over. And then maybe, and then they end up with a couple major big mega cap names and the indices. Oh, I'm just going to play the indices from now on, right? Thinking like it's going to last forever. And then they get hit there. This is not new. When rallies, when they run on fumes, that this is what you see. This is what you see. So you got to wait it out, and we need to see a healthier market, right? We need to see a healthier market. There are a lot, like we say, right? We use that term a lot, under the hood, but there are a lot of things, including China names, but American legitimate stocks out there that are already set up for us. We just need the climate to change. We need the climate to change. And I'm not even talking about junk. There are major names out there, and across the board in different sectors that, have been out of favor, to say the least. Yeah, there's a list of them. There's a list of them. And now what we're seeing is we're starting to see more groups join the club. You know what I mean? Little by little, there's more and more names. First, it was just the SPAC names, right? Then the Kathy names, right? It kept, now recently, not too long ago, it was the big stud growth names, right? The ones we really like. Little by little, you're going to start to see that list grows until the point where everything kind of gets nicked up. And then it ends. Yeah, crypto, exactly. It's a rolling bear market. That's what it is. It's a rolling bear market. Yep, it's a rolling bear market. right? So again, like I said, I don't know. I'm trying to think about being honest with you guys. If there ever was a period like this that ended without at least a quick flush of everything, I'm trying to think, but I don't remember one. I don't remember one. Everyone I remember, especially as obvious as this, where it's so thin out there, always ended with some sort of quick rinse of everything, right? So everything becomes correlated to each other. Everything, the market goes down, everything goes down. You understand? The market rallies, everything rallies. Right now, that's couldn't be further from the truth, right? That's the frustrating part. Like, you could be right on a market squeeze, and if you're in the wrong stock, you're going to lose your money. You're going to lose your money. So that's the risk that we want gone. That's the problem. That's the problem. So right now, like we've been saying, what it pays to do, right? If you want to, again, conservative means something different for everybody, but conservative in a degenerate way where we're looking to play and try to make some money, right? I mean, being ultra conservative, you sit in cash and you wait. I mean, it's part of the game. It's part of the process. These are things you need to do. Okay. That would be, conservative to the extreme. All right. What a lot of us are doing is we're trying to just find tactical opportunities off of short-term sentiment, right? And be nimble and quick and take profits when they're there, especially if you have them intraday. You don't necessarily have to risk them overnight, that sort of thing, right? Sizing down if you are holding overnight. I haven't played index calls since I caught that last sentiment signal for a swing trade. So that was when, Ani? I can't keep track of time anymore. Let me see. This low. Yep. That was the last time I had a swing trade. This here, I'm willing, but as you guys know, Ani, because you remember, we got really close to having a full setup, but just missed, right? But you could have. I'm sure some of you did. Swing trade from there. So, but again, even if I'm not swing trading, I'm taking advantage of this. So in other words, like, when we get anti-VIX bullish signals and stuff like that, I'm more eager to day trade. Like I said earlier, I'll play the TQQQ. You know what I mean? Because I don't have confidence in names right now. If names are catching flow, I'll play names too, off of some bullish signals. But for a swing trade, I want to have, I want a bullish sentiment. I want a bullish signal of tactical sentiment. You know what I mean? I want them all there. Again, that's just my frame of mind now, because it's not worth it to be quick. Like, let's say I played something yesterday, okay? And I held it, right? It was a nice squeeze yesterday. And I held it for overnight. No doubt I'm out today ahead of the CPI anyway. You know what I mean? So I gotta weigh the risk. Like, is it worth holding overnight and risking the money, the profits off intraday for that? It's not right. Or you do something like that. Exactly, Ani. Exactly. You know what I mean? Like this here, okay? The reason why I did swing off this setup is because this setup, we had a lot more there. So I had more confidence that, not that this rally was going to be bigger or larger, but that the lows, I felt, remember we were talking about that sentiment support? the low should hold, right? There should be buyers showing up there. Like I have conviction in that, more conviction. Like this right now here, this can roll over and make new lows. It wouldn't shock me. You understand? This would have shocked me. Okay, this would have shocked me if it rolled over and went and lower, because the signals would have failed there. You understand? So yeah, exactly. That's a better way to put it, right? You get multiple opportunities. You don't feel like you're rushed too, honey, right? You feel like you got to buy something here, otherwise you missed it, right? It's over with. Here, you got time to think, right? You can be patient. You can look to buy weakness. You don't have to chase. So, exactly your point. We feel more comfortable. Yeah, so that's what I'm looking. I mean, you hit the nail on the head, honey. That's pretty much been my game plan throughout. And it's been for a while, guys, right? If we do, that's what I'm hoping we get here, right? I'm hoping we get something. I don't know. Like I saw, Dan, you were asking me, I didn't ignore you. I forgot to answer. Like what would be the definition of a reset? There really isn't a set definition. What it would mean is that you get markets that are highly correlated. So there's nowhere to hide, Dan, and sentiment sets up. That would be a reset. That's my definition of a reset. You know what I mean? That would be my definition of a reset. Here's another. No, there's no minimum time frame either. There's no, some could take longer than others. There's no minimum. That's a good question. Dan. But there is no minimum. Just so you get an idea, like this is some of the stuff, right? Like the low we had. Where I did swing trade, okay? Like, look at this compared to this recent low here. Okay, here's sector sentiment. All right, so the one I did decide to swing trade off of in October, you had that correlation I was talking about, right? Every sector was, if not at bullish signal. Oh, wait, that's not it. It's this one here, right? Yeah, it's that one, my bad. Right, is this October? That would be October. Anyway, you get my point, right? All these were pretty much on bull signal across the board, right? Where this go around, look what we got. Okay, financials, you're almost at sell signal there. Mining, sell signal. Materials, almost on sell signal. Energy, you're basically at sell signal. You understand? Look at this menagerie right now. Semiconductors, tech, neutral. You know what I mean? This is telling you that was the last for semis, right? Yeah, exactly. Oh, so it's this one here then, yeah. So like, think about this. What, especially in like names, if you're going to play, what am I going to do? Like, I like energy names. I mean, they've been the only, group that's been seeing decent flow for a while now, but you can't buy them here now. You know what I mean? Yeah, exactly. A clusterfuck. Yeah, and then like semis, if semis have some weakness from here and roll over, we can't be surprised by that. It could easily happen, right? So that's what I need to, like, I want to see, Dan. I want to, one of the things, they don't have to all be there, everything I'm mentioning here, but enough of them. I want to see correlation here. So again, I don't like to use the word easy, but you got to understand, right? When you come out of this, okay, that anything that catches sweeper activity that you have an interest in, you could buy, right? You're not worried about, oh, I can't buy this. This is overheated. Oh, this is at neutral. Or this. You understand? You know that this rally, when it comes, is going to be strong initially, but more importantly, there's going to be solid breadth behind it, participation behind it. That's the difference. And what we see here, okay, is, again, not that the rally can't be violent. This was a really strong rally, but the participation, what's going to go up during that rally? Because the likelihood is it's not everything. And as we've seen, right, there's a lot of shit that didn't go up. That's the problem. You understand? That's the problem. So you want to see kind of everything line up. That's what I want to see at the least. That's what I want to see. Yeah, and that's another thing, right? Like net put delta, there's SPX, there's no hedging going on at all. Okay, that doesn't mean the market has to crash, but you're not getting any sort of reset without people hedging SPX. And think about what's going on right now, the opposite of what we were talking about coming out of the summer. Remember when we were talking about everybody was buying individual names and using SPX to hedge? Remember we had that discussion a couple of months back and it blew up in their face? Remember, it blew up in their face, that trade. Now, what do you think they're doing? They're shorting names and buying SPX. You understand? That's what they're doing now. That's what they've started to do. And that's why we're not seeing that rush to protection on any downdraft in SPX, because they're not using SPX to hedge as much. The indices are the strongest part of the market. It's individual names that are a menagerie. So that's why we need to see that blow up in their face. We need to see it blow up in the face. This has been, right, ever since Pink Panther here, from this point on, it's been a defensive rally, right? Every rally has been defensive in nature. Staples, utilities, mega cap tech. It's not a risk on rally. It's a bearish rally. It really is a bearish rally. A bearish rally. So, we want that to change. If we're going to get aggressive and take more risk, we want that to change. Otherwise, it's a shit show. It's a shit show. So what else I wanted to share with you outside of that? We've been talking about that for a while. So it's nothing different. You know what I mean? Patience. That's the main takeaway from it. The good thing that's been going on here, okay, even though we haven't got that reset, these downdrafts, and you hear this word a lot now, there's been a lot of de-risking, okay? So when we have this weakness here, what players are doing, they're taking down a lot of risk when that happens, okay? And then the rally, they're not putting on risk back in individual names, they're putting it on chasing the indexes, all right? So what's been going on, and this is what you guys are talking about, individual names are already set up. There's a ton of names out there, pockets of the market that are already set up. They don't have to correct anymore. We just need the stuff that's been holding up to correct. And then this way we can start playing those names. You understand? Those names, they did what they had to do. These things have blown up. Like even energy and financials, DD, if they come down with that quick reset that we get, I think honestly they're buyable. You know what I mean? Because like I said, I think you're going to see a lot more participation on that rally that comes out. Like, I don't think you're going to see this type of rotation we're seeing right now, especially initially. Especially initially. So they just need to come down with everything else for that period of time. It could be a week. It could happen in a week, guys. Like, we really had a shot this week. We really had a shot this week for that to happen. But we talked about it Sunday, right? You see all those things we follow from the brokerage firms, the positioning. Did you see how much risk hedge funds, all these players took off the table? The likelihood is you get a short-term relief rally. right? Remember we spoke about that Sunday? Like you had a lot of selling last week off this whole Fed scare. Like where is the right? This stuff, especially NASDAQ, they sold, they couldn't sell enough last week. You know what I mean? They couldn't sell enough. So the market has a tendency to make them feel like shit over the short term. So you get some sort of relief here. All right. But ultimately we want this to kind of fail, to be honest, to fail. And maybe it's next month. Maybe it's next month. Maybe we got to get through January. Maybe the flows are too supportive right now. You had the Goldman dude calling for a melt up, and he wasn't talking out of his ass. He was calling for a melt up based off the front running of potential flows coming into the market. But, now all of a sudden you see what happens. It comes out of nowhere. You had this Fed sort of pivot to even more hawkish, right? And, it added a little choppiness into the equation here. So, it might be come post-January expiration. I don't really follow too much on the short side. I don't really follow too much on the short side. My cash is my short position. I don't short. Like here's this. Look at this. Right? Look at this. Okay, the couple things we looked at here. Watch this. All right. We were concerned about this. Remember? Hedge funds. Look where they're at now. Yeah, that's decent amount of de-risking here. It lags a little bit. This might be even worse, Tree, when the next update. It might be even worse. There's a couple day lag here. Oh no, I mean I follow I don't follow Perma Bulls DD, like the McElliott crowd and Nomura guy and all that. They're not Perma Bulls. They'll let you know when shit hits the fan. But anyway, this was a concern here, and look, right? So even though we didn't get a full reset, a lot of things are doing what they need to do for us. Here's another thing. All right, look at this. It's hard to believe, but look, Goldman positioning. Look at this. So that's what like Omni was making the point earlier. It's really hard to imagine a sustained downtrend here. It's hard. Yeah, I know. Now we got earnings too, Moshe. That's a good point. The only thing, again, I think Ani said this during the other webinar, post earnings flow, Moshe, which is kind of, not takes a little bit of time, right? We're not there yet, but paying attention to, because listen, maybe this is something that works its way through earnings season, and post earnings flow becomes even more that more important, because the thing I'll tell you, Moshe, a lot of names are beaten up. And if they sell off earnings, they could very easily be an opportunity, in some of these beaten up names. Because there's a lot of shit factored in already, and then some. A lot of shit. But the hedge funds, this is all good stuff, and this is the stuff that takes time to marinate. Like this is not something that can happen overnight. You know what I mean? This takes time. So the stuff that takes time, has been doing its thing. Look at this. Did I don't know if I did it. See, I got to start, I got to make sure I put the, oh. 3-3. 3-3 on the bull bear indicator. So you could see, right? It doesn't take much. You get legitimately, you get a week, a rough week, and you might have all these things like this, flashing bullish. You know? Well, I'll tell you the last, like for me, when I'm aggressive bull, I'm swing trading options. That's when I'm aggressively bullish. And, you know, honestly, it's the summer. That was the last time I had a swing trade in individual names. The last sweet spot entry that we had, you know, like real reset, was election. If you're asking that, that was this, right? You know, that was the last. You could, I mean, you can't, you could put this into the category, but this was the one where you had, you know, you even had Sharpies go all in here, right? I don't remember, but anyway, but you could see, you could even see them on the chart, DD. Look, you know, a little period of shakeout. Everything else has been, every little dip gets bought. You know, and it's not the same back here as it is over here. You got to understand here, right? You have, maybe they're rotating into growth names. You have new growth names that are catching action, right? Or you have new value cyclical names that are set up that are catching action. Here, now you don't have anything. You don't have anything. You know, like all the aggressive activity is Ford and Apple, Tesla. You don't have any, you know what I mean? And you even see it in the price action. You know, you even see it in the price action. We're not missing anything. You know, there's no Momo out there in anything. You know, there's no momentum out there. And the stuff that's holding up, you know, you see, it's only a matter of time, right? These growth studs, they look invincible, and they gave it all back. It doesn't take long. Like, I haven't even looked. How are these untouchables doing? They still doing their thing? Well, look, some of them are getting punched in the jaw a little bit. CMG. There's not too many of them left. You know? Freaking Apple. Square. That thing's been destroyed. Oh, Jesus. Block. But you know, like this, you don't need more selling here. You know what I mean? You don't need more selling. We just need a different climate. You know, we need a different climate. S, that had a nice move today, yes. But see, like here, right? Oversold, trade, you get a bounce without a. Now, let's see, right? If we're in the same climate we're in, you're going to see this thing rally, and then you're going to see it come back down again. You understand? Like, you're not going anywhere. So it's all fine and dandy. The names, all you guys are spitting out. If you're looking to trade them, right? Especially with bullish signals, you trade them. But the problem is, I know a lot of you look down here and you're like, wow, okay. LAC, that's another name they buy every dip. That's a nice name too. But that's in consolidation too, isn't it? Yeah. Does it get out of here? What what tells us about that this gets out of here? Like the sweeper activity? What do we see that this breaks out? Where do you see anything? I don't see anything breaking out. You know what I mean? Right. Oil names. I meant on the growth side. Yeah, banks, banks too. Banks have been doing their thing. I mean, they're banks. All right. Like here's banks. All right. Like here's JP Morgan. All right. So you're trying to find some room in here to make some money. But again, guys, these are trades we're talking, right? And it's not a coinky dink that there was a bullish sentiment signal here and a bullish sentiment signal here and a bullish sentiment signal here. That's my point. You're trading off the sentiment signals anyway. You understand what I'm saying? Right? If you bought JP Morgan or this sentiment signal, 3 to 6 months out because you wanted to catch a nice move, you went nowhere. You're probably down on your options now, right? Guys, it's all about risk reward. You guys know that. It's all about risk reward. If there's a high probability of this happening, right? You have to clip it if you're going to play it. You have to clip it. The times you buy this with some time to catch the big move, you want to have confidence that, right? And even then it doesn't always happen, but you want to have confidence that you have a shot of seeing some follow through and getting paid for that risk. These are just trades. Like all these names, when I see these charts, it's like I'm looking at what we just looked at here. Look. Right? This is what it looks like. No? This is what it looks like. So that's it. These entries, later, Jared, these entries, there's nothing wrong with them, but you missed it. Now, let's say you like the financials here, right? You're going to buy it here. Right? You're going to buy it here or for a little breather. Right? Don't talk. If you have this entry here, I don't want to talk to you. You're fine. You're okay. You want to hold it. You're rolling out. You're good. I'm not talking about you. I'm talking about now after you lose that sentiment signal, right? Not even JP Morgan, any other bank, can you buy me or what are you going to do? That's the problem we got. That's the problem we got. All right. Same thing. If we had semis on bull signal here and you're buying semis, that's not a problem. That's not a problem. But the in between, and you don't realize there's a lot of in between, you're spinning your wheels. You're spinning your wheels. So, and the point I made earlier, like you look at this rally, right? We had a little bit of a wash, right? You get some favorable sentiment. We didn't get the tactical bullish sentiment, but we got some favorable sentiment, right? And what do you buy? Let's say you don't like financials, right? You wanted to what? You wanted to buy tech. Some of the tech, didn't go anywhere yet. So it's a lot tougher than it looks, guys. It's a lot tougher than it looks. We want to get back to a point here. If we're going to get aggressive on the long side, you want to get back to a point where you get a move on the indexes, right? And then now everything's not cooked across the board, right? You start seeing underbelly names and different sectors catching action, right? New setups. Not everything your entry was here, and if you missed it, done. You know, but off bullish sentiment signals, you know, that's the conservative way to approach it right now. All kidding aside, that's the conservative way to approach it. BHP, yeah, they started to move. Even FCX looks pretty good. They all started to look really good. Damn, this Rio got hit more than I thought initially. BHP, I haven't looked at that either. Let me see. Hey, you got some Niners here though now. You know? STNG is interesting. The only reason I said that, as I mentioned earlier today, I think risk reward wise, it's worth a look. You know, but it could very easily do nothing. Very easily. Was this a Berry name? That's right, it was a Berry name. And the CEO, he actually lost money his last go around when he bought some calls, but he just recently bought some calls. But it's a decent spot. It's a decent spot. You know, and you know what it is? It's a name. The market doesn't have really a big influence on it, you know? Not as big, I should say. Yeah, those are the good ones, Zim. That's a good one. And you know what's interesting, the flow has been the same, nothing special, but there's been some selective action out there, right? You could count them on two hands over the past couple of months, but there are names they're playing. Like this name, they've been stabbing at, and they leaned into it today. OVV. This is a energy name. Anybody know this name? OVV. But that's a name that they've been swimming around. PK, yeah, that's a hotel name. This is like a little hidden hotel name, PK. Because the hotels are one of the few that they've been leaning into with some size. Hilton, Hyatt, Marriott, all of them. CVE, that's a good one too, Underbelly Energy. Wow. Wow. And look at this. Look at like all the ones that they hit hard. Devon, right? How's the Fang doing? That one got hit pretty hard too, Fang. Yeah, they all look good. REI, I played that a couple of times in the past. It didn't move for me the couple of times I played it when oil was hot. I remember this REI. But you know, and energy looks good on dips. You got to be careful now. You know, here's the risk now, guys. Okay. The risk is that everybody and their mother, okay, just rotated out of NASDAQ growth into value and cyclicals. Okay. If you don't think that trend's going to reverse, at least for a short period of time, you're nuts. If you think everyone's going to get rich all together because CNBC told us we need to rotate, you guys haven't been playing this game long enough. Everybody and their uncle's parents are telling you to rotate out of NASDAQ growth and tech into value. Everybody. I can't find one person right now telling you not to. We went through this. I got deja vu. Remember the last time we had this discussion? Remember? Yeah, last year, everybody in the reopening trade, commodity, exactly. Commodities, we're going to super cycle. You know? So that's the risk right now. Okay. Again, I'm not trying to scare you out. If you're long already, don't worry about it. I'm talking about new money here. You know, new money, you got to wait for a breather now. You know, and that's what this tells you here, right? That's what this is telling us. Okay, this is telling us now, listen, all right, you missed it. You look, look, there'll be opportunities. All right, they will be opportunities. But right now, you missed it. You're late. You're late. You know, you're late. So that's the risk now. You know, everybody, because again, they're working. They're the only things working right now. So everybody's talking about these energy names. Everybody. You know? Maybe they go higher for a little bit more. Yeah, who knows? We don't have crystal ball, but no matter how good they look, you got to wait for a new entry now. You know, that's even more the reason, right? I want to see this. I want to see a damn washout in tech here, right? Maybe even NASDAQ future sentiment, get the bull signal, and then we got a nice trade. Yeah, exactly, Ryan. How many times we guys see it, right? The one time, maybe there's going to be a one time where they don't rug pull them. What? The odds are against you, though, right? At the least, the odds are against you. And you don't want to think about this game like that. Oh, man, a lot of people getting crushed with her, Cal. A lot of people getting crushed with her. You know, and I can't feel bad, Cal, because she had an impeccable run there. You know what I mean? Ridiculous run. That's not going to last forever. Sandy, all kidding aside, if you take one piece of advice from me ever on these webinars, that's the only way to look at this game. That's the only way to look at this game. Risk reward and probability. That's it. You know, everybody's in search for certainty in this game, and there's no such thing. It's all about risk reward and probability. That's it. You know, and that's what all this stuff we look at. You know, there's not no magic crystal ball hidden in these things. That's why people get turned off from them, because they want instant reaction with these indicators. Right? All this tells us is, you know, if you're bullish financials, you like the financials, right? Your risk reward for a new entry is a lot better here than it is up here. Period. Case closed. You can't argue against that. You understand? You cannot argue against that. You can try to make the argument that there'll be one time where they run through overheated sentiment, but the odds are against you. You're talking about the one time out of how many, right? Out of how many? Nothing. But you guys know what I'm saying. But see, that's the only way to look at it. You know what I mean? The only way to look at it. Your risk reward and your probability for success goes up here. That's it on a new trade. And here goes down drastically. You know, and you know what happens when you start, all kidding aside, guys, when you start to look at everything through those lenses, like when you look at everything you do in this game, you know, you become less frustrated and shit starts to make sense. You know what I mean? And yeah, this is an old chart. I can't find the new one here. Where the hell's the new one? I'm sure I got to start labeling these things the same thing, Aisha. Otherwise, I'm going to make myself nuts. Here it is. Here it is. Right? Hold on. Yeah, this is it. So this is up to date now. Oh, yeah, you're right. I took a good call. This is a little different here. See? So you got a little, we're not that far away, guys. Not that far away. I'm talking about trade. So in other words, like you get this set up and you get like NASDAQ sentiment, future sentiment that we look at set up. You got a nice trade if you're interested in NASDAQ tech. You really do. It's worth a shot. It's worth a shot. The problem is you're gonna have to be careful with these guys. You understand? That's the trade-off. IBB, yeah, IBB is weird, right? But big biotech has been doing okay though, right? Small cap biotech is not doing well. Can't hold gains, really? I haven't been following it. Yeah, XBI is because it's all small caps. It's getting destroyed. All Kathy names. Look at this. Right? And look at this. And Labu. Like this is the stuff we were talking about, Oh my God. There's no bid in these things, Dad. Right? There's no bid. There's just no bid. Yep. Every time they're green, they sell. Every time they're green, they sell. You took a nice swing right before it dumped. With some time or no time either. Yep, you're right, Ani. Yeah, timed it perfectly. Oh, you got out? Oh, I thought you were making fun of you. Oh, that's awesome. Awesome. I thought you meant you got stuck in it. I thought you were complaining. But yeah, these little guys. IBB, I thought, wow, why does it look so bad? I thought IBB. Look at like ABBV. What else is in IBB? Bristol Myers, is that in there? Aluminum. Yeah, why is IBB look so awful? Wow, that's a nice pop. Yeah, biotechs, nuts. I'm sure they'll have their day. Oh, these guys have been getting beat up a little. This is more pharma, right, than biotech. I don't know what group these guys go in. Healthcare. LRCX, how's she doing here? Yeah, look at it. It's still strong though, this stock, right? Still strong. These things have been solid. Marvel. Yeah, these things are good names. I would like to see them get hit short term too. That would be nice. SMH is still hanging in there. Wolf, that's the new semi, right? That everyone's talking about. Wolf. That's a nice breather though here, Wolf. LSCC, they finally rinsed it. I saw that. ASML, that's a beast. These things are beasts. Oh, this one too. This Taiwan semi been moving lately. I saw it. Yeah, it looks a little bit better, right? Look at this base. Jesus. Yeah, it caught some flow. It had earnings today, I think. Yeah, yesterday. Why did the base? His base. This had some run here though. You guys remember this move? Psychotic. That's a good semi, underbelly semi on. I know this name. You know how many times I played this name? This thing was such a pain in the neck. Wasn't a big mover at all, but it's a good looking semi. This on. What a move. AMAT, yeah, the big guys. These are all, they're beasts. They're all beasts. They're all beasts. But look, you get a little entry here, even for a half decent trade. That's what we look for. GFS, right? That's Foundry. That's another new one. Yeah. the post IPO names. I love that shit. They've been so out of favor. Anything speculative out of favor, everything. Anyway, guys, but listen, we wait, and you guys have the right idea. We just all need to remind ourselves, like we talk about, just use this stuff as a compass, just use it as a compass. But we gotta be nimble here. You gotta be nimble here. Until we get that little quick rinse, we gotta be nimble. I like these names, I like these names, but you got earnings now. I mean, these names, they look like they have a lot of upside. They really do. It may take time. Obviously, it's been taking time. But, the thing, Cal, if we go through a period where the market has that reset, right? Whatever it is, a week, 2 weeks, these things, they're not going to get hit, especially that they've been moving recently here. They're all going to get hit. I think we got to wait for that. We waited this long. I got to wait for that. Again, you could play, if you're going to take a shot on one of these things, it doesn't, a loser's a loser. It can happen anywhere. But I'm saying to, stick your neck out a little bit and feel good about it. We gotta hang in there a little bit longer. I'm telling you, I think it's sooner than later. I think this all comes to a head. One way or the other, this all comes to a head. Yeah, listen, if it does happen from here, I don't think it's going to be anything major. I think it's going to be a nice, quick, healthy shakeout with the noise of interest rates. I think it's going to get the job done. But if we rally from here and then it comes, then it could be more painful. You know what I mean? To God's ears. I agree. So I think if this can happen in this, we'll be okay. If this goes like this and then we get it, because we're going to lose a lot of what we got. Dwyer just saying every time SPY goes up 25% a year, there's a yes, right. So that would get the job done, Dustin. You know what I mean? That would get the job done. Yeah, it's not going to take much from here. It's not going to take much. So that's why we want it now. Because look, right? You don't have hedge funds. You don't have positioning. Nothing's full right now. VIX. You don't want that stuff to go away. You understand? So, honestly, it's too difficult front running the flush. It's you just, the way to approach it is just be wary of the risk. Try to be smart about it. Don't get caught in it. But to capitalize off it, I don't see it worth it. I don't see it worth it. Because of these things that happen in the interim. Look at these squeezes. I don't know how much VIX is going to be involved. The positioning, so you're saying what, play for a VIX pop, something like this, possibly? I don't know if it's worth it. I don't know, I don't know if it's worth it. I don't know. The VIX positioning is just not lopsided enough. I don't see it. I don't see trying to take advantage of the downside as far as positioning is concerned. I don't see it worth it. Now, you can trade through it without a doubt. You know what I mean? You could trade through it. But to front run it, get ahead of it, I don't see it. I don't see it being worth it. I think, the smarter thing is to just step aside a bit, hope it comes, and then be ready, keep our eyes open for that thing to turn. You know what I mean? It was. Let's see what today's rally did, Panda. You know, it was. Yeah, even VIX positioning, Abdul. There's nobody short in VIX. There's no shorts there. You know, so without that, you need an exogenous event. You need, you know what I mean? You need that major catalyst. And, you know, to bet on that, yeah, you're asking a lot. I've seen people go broke betting on that. Yeah, you got, and you know, you got January expiration, you got the Fed after that. So, you know, I was thinking it happens maybe a little bit before that with everyone, you know, they front run that, but yeah, I wouldn't put my money on it. That's for sure. And you got earnings season too. You got so many balls in the air right now. You know, the way I would look at it, guys, it's the tug of war thing. That's the way I would look at it right now. You know, and when they pull too hard on one end, look to play the other end. That's the way I would look at it for the time being. Wow, Tesla earnings and Fed day? That's a day right there, Damien. All right, guys, I got to run anyway here. Thanks. Super Bowl pick. You know, I'm not a big NFL fan. But oh, you know what? Did I play a futures thing? Oh, I think I did. The Bills. You know what's funny? I can gamble now. I threw like $500 on the Bills to win the Super Bowl. There was decent odds. The Bills, that's right. Oh, forget it. This weekend I took the needle. I survived. I didn't get lumped up, thank God. I sent some money, DraftKings. Later, I DraftKings, FanDuel, and I took the needle all weekend. But the Bills, I bet to win the Super Bowl. Nice. The Jets. Oh, Jesus. All right, guys. Enjoy the night. Happy New Year. Happy and healthy to everybody. All right. And let's see how this plays out. Be good. Yep. I'll see the majority of you mañana. Have a good night.